I'm Charlotte McLeod with the Investing News Network, and here today with me at the Canadian Investor Conference is Chris Berry, President of House Mountain Partners and editor of the Disruptive Discoveries Journal. Thank you for joining me today.
Thanks for having me.
All right. So on your panel yesterday, one topic that came up was China's environmental cleanup plans and how they may impact her critical metals supply. Could you talk a little about the situation for graphite? Because I understand there's some mines still offline there.
Sure. So, the China cleanup story is something that has been in the news for a number of years now. I think it's probably the worst kept secret in the commodity space that it needs to happen, and it's going to continue to happen. I think one of the challenges, not just with graphite, but with a number of the mines in China, is that they're smaller mom-and-pop operations, and so it's proven to be harder to shut some of these mines down. So, I think ultimately what you'll see in China is more consolidation, and that'll be easier to control, but ultimately the mining in China, and again, this goes a little bit beyond graphite, but it's going to have to get a lot more efficient if they want to sustain this growth rate that they've targeted for the next, decades.
Right, okay. So now looking at companies outside of China, you've mentioned you're interested in companies with near-term production potential and off-taker strategic agreements. In the graphite space, one of the concerns some people have is off-take agreements without any money behind them. What's your take on those?
It's just a piece of paper with words.
Yeah.
And I don't mean to be flippant or nasty, but you want to see binding offtake agreements, and there's still going to be a lot of potential loopholes or a lot of questions that come out of that. But ideally, management can address those. But yet, you want to see an end user of a given company's graphite or product that is willing to, pay a market rate for it.
Okay. So these days, it's tough to talk about graphite and cobalt, and of course lithium, without mentioning Tesla and its gigafactory. However, it's not the only company that's coming out with a megafactory. Can you talk a little about how those other companies stack up in terms of demand?
Sure. So an example would be LG Chem. They've entered into a joint venture agreement with a couple of Chinese companies, and their goal is to create their own gigafactory equivalent and be in production for, I believe it's 100,000 electric vehicle batteries by the end of 2016. And so, again, you just have to think about some of the nuances, but the potential demand here is I think, realistic. And I think ultimately one of the real challenges that not just these end users are going to face, but the entire value chain is going to face is, where is all of this raw material going to come from? It's no secret that there's a lot of graphite out there, or a lot of lithium, or a lot of cobalt, but how much is available, in other words, mineable right now, and available to be implemented into existing or future supply chains, I think is an open question.
Okay, and now your pick for cobalt that you mentioned yesterday is Freeport-McMoRan, which is a larger company. So I was just wondering, what's the idea behind looking at a larger company than...
Well, again, we're in obviously I don't have to tell you about the market for commodities right now. Freeport is the largest producer of refined cobalt outside of China in the world, and so one of the reasons why I pay a lot of attention to what a Freeport-McMoRan or a Glencore or a First Quantum or a Sherritt says, is these are all cobalt producers, is I want to get an idea for what they think about the space and what their plans are for increasing capacity, if that is the case, and then you just sort of work down from there. I just right now am a little bit more risk averse, as I think a lot of people are, but I think Freeport is an interesting way to potentially play this cobalt move higher.
Okay, and that starting from the top kind of strategy plays into your advice for investors yesterday, which other people have said too. Looking at the broader picture is where you should start. So if you're an investor, how can you start from the top and then work your way down to deciding what companies you want, what metals you want?
Sure. Well, I think, again, we talked about Tesla being the 800-pound gorilla, and you can't have a conversation. I mean, you just want to take a look at how much copper, how much lithium, how much graphite, how much of these materials is used in a given automobile, and then take the projections from these companies and do the math and say, okay, we know that the gigafactory is going to need 25,000 tons of lithium hydroxide or 100,000 tons of graphite. That's not a hard number. I'm just using that as an example. And then say, okay, well, who are the existing producers of the given commodities? What did they produce last year? What does the trend look like? Do they have excess capacity? Do they have plans to increase capacity? And then again, you just take another step down. Who are the near-term producers who can enter that space? And just kind of go from there. And ultimately, you'll end up in the junior space trying to figure out who can navigate these waters where they can get the financing and the offtakes and all the stuff that's really, really important in this space.
Right, so just very methodical, I guess.
It's methodical. It's not rocket science. I mean, there's a lot of graphite out there, but you want to find the companies that, again, at the end of the day, and this is graphite, this is lithium, this is rare earths, they are able to produce a product that an end user will pay a market rate for. There will be a discount there, obviously, but they'll pay a market rate for it, number one. And number two, the company in question, the mining company, can do so profitably.
Okay, well, that's all for me. Thank you so much for joining me.
Thank you.
And this is Chris Berry, and I'm Charlotte McLeod with the Investing News Network.